Ira Epstein of Linn Associates with your agriculture wrap-up, and this wrap-up is for Wednesday, and we're now at the 29th of April, last trading day of the month tomorrow, but 29th of April, 2020, and we're just around 3 o'clock in the afternoon. So let me step over here. Wheat down 9, corn up 2, and the beans up 5.5. As I said the other day, beans are acting like a market that isn't trying to go down anymore, whereas the wheat market has been the weakest. And if you've been hearing the commentaries that are in our charting software package, our media area there, we have been very vocal about the short side of both KC and Chicago wheat. And they give all the reasons for it there. That's not my job. My job here is to talk about what the markets are doing. A little bit of a bounce in the crude and so on. So maybe some pressure off the corn there from the ethanol potential that a lot of people think that we're running into the point where there's so little ethanol being made, we're going to cut into all the stocks, and maybe that's the good news. As for the stock market, today was another rescue day, if you will. And here's what I mean by that. We went to a 7-week high today. The second thing that's gone on, there appears to be a breakthrough in a treatment from one of the pharmaceutical companies that might be able to take down the path of the seriousness of COVID-19 for a number of people. Now, it's not the knockout treatment. First of all, it's not a vaccine, it's a treatment. So assuming you get it, how does it work? Well, about a third of the people did better with it. So that is big. I mean, it's the first step, but it's a step. It is not the cure. It's not going to change things. It's not going to be, hey, I go to the hospital and I know I'm not going to die from it. That isn't what it is. But the market looks at it as the first step. The second thing today, the FOMC came out and you saw the rescue announcements that the Fed's just going to keep doing what it does. It's within its authority and it's got the markets back. That helped the market there. So now where are we in these markets in the grains? So let's go to them. We seem to have stalled a little bit. Now, when I say stalled, for the week, we're only down 0.5 cent. So I think we have stalled on the break in this market right here. When we look at a daily chart, you get the picture where you can see what's going on right into that area. The market has a pattern still of lower highs, lower lows, which is bearish. That is the definition of a downtrend. And when I look at charts, I build on them. So to me, the cornerstone starts with swing lines. The next part is I filter them. I use moving averages to do so, and the market is under the 18-day average of closes. So the other thing I've got is I have a trend down. The bias is down to the market since the market is under the 18-day average. What would neutralize this pattern? Getting over 846.25. So 846.5, if that were hit, it would break the pattern of lower highs, lower lows. The next thing I look at on the chart is where are the Bollinger Bands, because they act as, think of it, as fences. If the market goes too far to the left, it hits the fence here, too far to the right there. Well, it's above and below the market, those fences, so support and resistance. There's a way that you run that fence over and you keep riding on it. You're not there in this market. If the market doesn't want to get over 846.25 and wants to drop again, then the 826.5 area support, but that still doesn't take out that low that we made under 820 just a week and a half ago or so. Then I look at momentum. The momentum isn't telling a story. Momentum's gone flat at the 30 level. One of the numbers is under 30. That means this market's very oversold. We have an oversold market where you can see that in the momentum, the trend down and the bias still down. Then I go to the meal market. I've been looking to see if meal would hit that would hit the lower Bollinger Band. The 18-day average, we've been in play. We've had a downtrend. We reestablished it just yesterday. Why yesterday? Because prior to that, I could argue we had higher lows, lower highs. So the key was to take out 290.30, which you did. It wasn't too far away to get to the lower Bollinger Band. It went there for good measure, held it, and it finished up a little bit higher on the day, as you can see. Oversold. I think the pros came out of their shorts today. I think it's a smart move. Oversold. You hit the Bollinger Band for the first time since way back here in February. And I know I mentioned that to you yesterday too. In the soy oil, it depends how you look at the crush spread. This has been getting the bid. So oil's been, even though it's in a downtrend, and it is in one, it's been getting a bid lifting it. It's oversold. It hit its Bollinger Bands here and it stopped going down from that point. Next, in the corn market, we have an outside day up. Market made the lowest low of the recent break. This is the low of the whole break that we've had. But over the past 5 days, that's it. And it closes higher in an oversold condition. Well, I look at it that the market had already hit its downside targets, riding the lower Bollinger Band oversold. Hard to be short when a market does that. Next, in the wheat market, I don't think traders, this is what I teach at least, deserve to be short, or should stay short is the right word, under the lower Bollinger Band. Markets 95% of the time trade to the right-hand side of that. That's what I think will go on. In the sugar market, we have a pattern of lower highs, lower lows. It doesn't want to stay under that band. We had talked about this just yesterday. I pointed out that this was the day where you closed on it. You had 2 days under it, and now you've popped. Okay. And I don't think that the short position's fully warranted anymore. You're oversold in a correction. Let the market finish the correction out of the oversold territory and then decide what to do. Coffee continues to break down, and I've got a target of this area. Will it be able to make it? Why is that my target? Because I have an embedded reading and the market's showing no oomph on rallies whatsoever. The cattle market, you can see that the market's pulled back to that line in the sand, the 18-day average of closes. Now, this might be able to set up an uptrend. How? We've got a pattern of a lower low and a higher high. You have an inside day today. If the market takes out today's high, you could end up and not take out today's low. That's going to be the key. If you don't take out today's low and you go up from here, you'll have higher lows and then the higher high pattern. That could change it all. In the hog market, yesterday was the first challenge, and we'll come to that, of the upper Bollinger Band. One of the things that I teach is that when the market makes its first attack at that, and I realize that's where it looks the most bullish, forget it. That is where I think the pros are stepping out of the market. And today, down again from there. So that's what I think's going on. Overbought, the pattern of lower low, higher high. Why get involved with that type of pattern? You know, I know a lot of you look for market information like I'm talking about, and our Linn research offers a lot of the fundamentals. If you're a fundamental trader, you want to read our meat reports and our grain reports. Then from there, you want to get a feel as to our technical ideas. Well, they write about that, and I fill in on my own newsletter what I'm seeing in the market, but more or less what I am is a chartist. And as a chartist, I put out via my morning update, and that's the real key to what I do for grain traders and the like, because I'm covering the day's action, and I'm giving you what I'm seeing in the softs, what's going on in the meats, what's going on in the grains. All technical picture, trying to help you out there figuring where the market's going. To find out more about this, just go to our website. You'll see our free offerings, or if you want to find out about my subscription services, go to research on our website. It explains it all right there. You can also click here to get there if you're watching me on YouTube. In the meantime, I'm Ira Epstein. Interesting market development starting to happen. I will talk to you all tomorrow. Take care.